You use ChatGPT, right? Maybe not every day, but you've used it, you've seen it, right? Happy. You understand that it's become one of the most widely used software products in the history of technology. Now, let me tell you something about the company behind it. Last year, OpenAI spent $34 billion. They made $13 billion. They lost $21 billion in 1 year, and they plan to burn over $850 billion by 2030. Now, you might be thinking, that's their problem, not mine. I don't own OpenAI stock, but I'm not a tech investor. But here's what most people don't understand. OpenAI isn't just a tech company, it's a load-bearing pillar of the entire global financial ecosystem, driving unprecedented growth. System right now, and if it starts to crack, the damage doesn't stay in Silicon Valley. It comes for your savings, your retirement, your investments. Let me show you exactly why. Let's go through the actual financial picture of OpenAI, not the press releases, not the real numbers. In 2025, OpenAI spent $34 billion. They generated $13 billion. In revenue, that means they lost $21 billion. To put that in context, Uber, one of the most famous money-losing companies in startup history, burned $32 billion over. Its entire lifetime before becoming profitable, OpenAI is on track to burn more than that. In 2026 alone, where is all that money going? $9 billion on research and $5.7 billion on marketing. Development, $5.7 billion on sales and marketing, the rest on computing infrastructure, renting. The servers and chips needed to run their AI models. And here's the critical problem. The more they grow, the more they lose. Their revenue went from $3.7 billion to $13 billion. That sounds great, but their costs grew at nearly the same. In their current model, where that changes, here's something that OpenAI would prefer you didn't: confidential. Rate, they are spending faster than they are earning, and there is no credible path. No, training AI models is not a one-time cost. It's a permanent, ongoing expense that grows every year. And think of it this way. An AI model is built on keep your finger on the pulse of global shifts. The world is changing quickly, with news and events happening every second. Language evolves, new information emerges. If you don't constantly update and retrain the model, it falls behind. The consequences can be significant. It becomes less useful, and it starts making more mistakes. So OpenAI has to keep training every year at increasing cost, because each new model requires more computing power than the VAR. Last, this is not a problem that gets cheaper over time. It gets more expensive. And right now, there is no technology on the horizon that solves this. OpenAI themselves have acknowledged that their AI models still hallucinate. They confidently state things that are factually wrong. This is mathematically inevitable with current large language model architecture, and fixing it requires a fundamental shift. It's more training, which costs more money. Now here's where this stops being a Silicon Valley story and becomes a story about your money. OpenAI has made enormous financial commitments to fund a network of other major companies, and those companies have told their investors to expect, with that revenue, Oracle, one of the largest enterprise software companies in the world, has projected the $300 billion in future revenue that depends on OpenAI continuing to pay them. And for cloud computing services, Microsoft which you probably know from Windows and Office, has projected $250 billion in future revenue tied to OpenAI. Amazon, through AWS, has $138 billion of projected revenue from OpenAI and similar companies. CoreWeave, a specialized AI computing company, has $22 billion of projected revenue from OpenAI. Now, what happens to those projections if OpenAI runs out of money? They disappear instantly, and your fund take massive hits at the same time. I want to be clear, I'm not, the stock prices of Oracle, Microsoft, and Amazon, which are in almost every major index, are showing unprecedented decline. Predicting OpenAI will collapse tomorrow, they have $22 billion in cash. They are actively raising more, but I am saying that their current financial trajectory is unsustainable, and the question isn't whether they will face a crisis, it's when and how bad it will be if investor confidence in OpenAI drops, if people start to shift from enthusiasm to caution. The ripple effects are significant. NVIDIA, whose chips power the entire AI ecosystem, loses its biggest justification for its current valuation. TSMC, which manufactures those chips, has committed capacity to NVIDIA based on projections that may not materialize. The semiconductor industry, which is deeply embedded in global index funds, takes a hit. And, as we covered in the last, the private credit funds financing AI data centers start to struggle. The pension funds and retirement accounts that invested in those funds take losses too. This is a chain, and OpenAI is one of the most critical links in it. So what does a rational person do with this information? You don't panic. Panic is never a useful tool. Financial strategy, but you do take it seriously, and you make sure your portfolio isn't entirely dependent on one scenario, the scenario where AI delivers on every promise, every projection, every valuation. Smart diversification means holding assets that perform differently under different conditions. If tech struggles, what else do you hold that doesn't move in lockstep with it? This is where assets like crypto can play a genuine role, not as speculation, but as a portfolio component that operates independently of the AI tech ecosystem, the two resources I've linked below, Intelligent Cryptocurrency VIP and Keystone Investors Club, both approach this from a systematic, framework-driven, exactly. You need perspective, not hype, not trading tips, actual frameworks for making better financial decisions. Links are in the description. Why Google, one of the most profitable companies in history, suddenly decided to raise $85 billion in a digital stock offering. In the description, check them out. In the next video, I'm going to look at $1 billion and what that decision tells us about what's really happening behind the scenes. Subscribe and hit the bell. I'll see you in video 3.